Good morning and thanks so much for joining in. You're watching Ask Profit. My name is Mathew and with me is Smriti, Chaudhary, and we'll take you through the next half an hour or so of trade. If you've got questions for us related to stocks and nothing else, if they're short-term or long-term, it doesn't matter. Send them to us on the WhatsApp number that is on your screen right now or on any one of our social media platforms, particularly on the YouTube Live, and we'll get them answered. Before we do though, let's take a look at where the markets are right now. And in fact, you have the benchmark indices that are trading not too far from the low point of the day. There's been quite a lot of chop and churn in trade today for the benchmark indices as well as for the broader markets. But right now, we're trading with cuts of about 0.2% for the Nifty 50 and trading below the 22,200 mark. The broader markets are looking better though. And you have the mid-cap index that's up about 0.8%, or rather right now 0.7%. And you have the small cap index that's trading with gains of about 0.7% as well. Now, in terms of the contribution, I want to look at which stocks are contributing to the benchmark index move today. And on the bottom, you have HDFC Bank that's proving to be a bit of a laggard and a bit of a weight or an anchor for the Nifty 50 right now. You have Coal India that's doing reasonably well, Cipla that is doing well on the back of promoter selling that has taken place. We reported on that deal earlier today. And the stock was up and about, but not too much in the way of the gainers that are leading to strength for the benchmark. In fact, if anything, there are large companies, large stocks that are leading to declines. In terms of the sectoral movers, you have the PSU banks that are doing quite well today. In fact, they're the top sectoral gainer, 1.6% higher. Realty is doing reasonably well, building on the gains from yesterday's session. You have energy that's up and about as well. But among the losers and the laggards, you have the FMCG index that's down about 0.5% or thereabouts. Let's talk about the stock of the day. And we've got Siemens that we're focusing on because this is a stock that is gaining as much as 7% on the back of earnings. There is quite a bit that you should look at under the surface. Of course, the net profit nearly doubled, but there are a few points to be made with regard to the order inflow. Puneet is joining in to give you some of that fine print. Puneet, of course, the bottom line number looks really great, but what can you read from the fine print?
Yeah, thanks for that. So let's just quickly go over the numbers as well because it came post-market hours yesterday. The revenues have gone up roughly 18% to come at roughly 5,700 crores. When we look at the operating profit is up 41%, and the company has mentioned that they saw strong operating leverage play out, which as you rightly said, led to a profit rising by 70% for a company of Siemens size, coming in at roughly 800 crores versus 400 crores previously. When you look at the India highlights, the company has got an order inflow of roughly 5,100 crores in this particular quarter and has maintained that order inflow of roughly 5,000 crores per quarter. When you look at the other key highlights that the company mentioned, they said that the profit was driven by higher volumes as well as productivity, while they also had cost optimization which led to better profitability going in this particular quarter. The one key thing that the company said that they did see certain large orders deferred to the next few quarters due to bureaucratic issues is what they categorized it as. And the industrial automation segment, which is one of the key contributors for the company, they said that in the ordering is on account of normalization of demand. So this is a key positive in this industrial automation segment. And they said for delivery of the industrial automation products will improve compared to the pre-COVID period for the company. One of the key notable other points that the company said was the demerger of the energy business. This will be listed on the BSE and the NSE as well, and the listing is likely in post 2025 once the necessary approvals that the company has received. They will be holding roughly 69% stake, and the share swap ratio is roughly 1:1 for the same. So what are the brokerages saying? Jefferies has a buy call and they've increased the target price to 8,000 rupees on Siemens from 5,500 earlier. When you look at the key, they have said that the company's capex has been 50% higher over the last 7 years, and also an additional capex of 333 crores in the smart infra business, which the company is a key contributor in. The one point which you should note is the clean demerger of power division has potential to create additional value for the company. That's what Jeffrey thinks, and this point has been accepted by Nuvama as well. They also have a buy on with a target price of 7,700. So overall, really strong numbers. As you rightly said, commentary was key, and brokerages agree with the same. Back to you.
All right, thank you, Puneet, for that. And on that note, let me introduce you to the guests for today. We have Saurabh Jain, Equity Head Research at SNC Global Securities, and Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher. Welcome to both of you, and thanks for joining in. Saurabh, I'm going to start with you. You heard Puneet talk about the commentary and the numbers on Siemens. Now, there are a couple of things that are happening here. There's a demerger aspect of it. There is then the order book that fell a little bit, about 9% year on year. There is also the fact that there is some, and that's on the back of deferment, of course. There's also slowdown in the industrial automation product orders. Now, considering all of these factors, what's the long-term view on something like a Siemens?
Hi, good morning. See, long-term view on the Siemens will remain positive, but as you correctly said, that the company has been seeing some kind of a slowdown in their large orders, some slowdown in the automation segment, and if, one must consider that huge re-rating has happened in the last 2-3 quarters. I mean, the stock was, trading at 10 times to book value, and now it is trading in 19 times to book value. So I think most of the positives have been, have been quite largely factored in the stock prices. While view remain positive, the demerger is going to happen after 3-4 quarters, and that will give shareholder 1:1 ratio, and then the company will be focusing on both the two major verticals separately, which company feels that it would be beneficial for future growth that India is experiencing. Now, I feel that the gains have largely been factored in. There may be a 10-20% kind of a gain which may follow in the next 2-3 quarters. But I think it is a kind of a portfolio stock. If one is holding, then he can hold on to it. But I don't feel like jumping onto at these prices.
That's a fair point. So avoid a fresh entry. If you're holding, perhaps you can continue to hold. It's time now to jump into the query segment. And as I mentioned at the start, if you've got questions for us, you can send them to us on that number that you can see at the bottom of the screen. And the first one is coming to you, Vaishali, and a couple of stocks, Mahindra and Mahindra, as well as HAL, Hindustan Aeronautics. And this is something that Janaki Ram from Shivakasi in Tamil Nadu wants to know. Should these be bought, and what should the ideal holding period be for these two stocks?
Well, let's start with Mahindra and Mahindra. I think the buying opportunity is not now. One can wait for a dip if at all it comes towards 2100 levels, because that's where now we are looking at prominent support, because the stock has really run up quite a bit. So I would say wait for a dip. 2100 should be the level that one can consider, because it's already an overbought, so it's a cautious move. So even to those who are holding, should hold with a trailing stop loss. And the other one which we are talking about is HAL. And HAL also, I think 3800 is a prominent support. And in just some time back, we saw a dip coming in. We saw a low of 3820. So that should act as a prominent support. And these are the levels that one should look for buying opportunity.
All right, coming back to you, Vaishali, this one's on Tata Investments. This is from Anuradha from Mumbai. They say they bought the shares at a price of 7,888, so elevated levels from where it's currently trading at. Now, the share has been a multi-bagger, but seems to be losing ground. What's the outlook from a short to medium-term perspective on Tata Investments?
So, well, the stock is definitely consolidating, and I think, even if it dips up to 6,000 levels, it is yet a good level. It's not damaging the trend. Only below 6,000 would be a level to worry about. So that would trigger a further downslide towards 5,400 or so. So right now, I would say with the support of 6,000, one can consider averaging out also.
Okay, we've got a question from, I'm trying to get the name. Muralidharan from Chennai, and he's asking about Aurobindo Pharma, which he's bought very recently at levels of 1,600, and he's bought as much as 550 shares. He's wondering whether to hold. I believe that the price might be a little wrong from what I'm reading it. 1,160 is what he has bought it at. He's wondering whether to hold on to this. So, and he's also looking for a target. Saurabh, what's the view on this particular counter?
I think the company is posting good set of numbers, and the management has also guided that there will be a good growth going forward. Pharmaceutical sector per se is doing well. I think a lot of companies are launching new drugs and coming out with newer molecules. Even US is looking okay to many of the companies. in that context, I feel that it is good to hold for next 2-3 quarters.
All right. The next counter we're talking about is Tamil Nadu Mercantile Bank. This one's from Jason. Now, it's a recent listing. So, Saurabh, coming to you on this, for somebody who's holding these shares from the IPO price, if I'm not wrong, it has fallen since then. And
about 4.5% or thereabouts.
Yeah, so it seems to be that the viewer is in a bit of losses. Q4 results are out, not too much there as well. What's the long-term view on something like this? Would you suggest holding on to it?
I think on the banking sector, our view is positive, especially in the context that the RBI is not likely to cut the interest rate, which will help these banks to maintain the margin. Since it is a newer listing, I think it is prudent to wait for how the quarterly earnings pans out. I haven't seen the recent quarter earnings. I think if the numbers are okay, if the numbers are okay, then it is good to go.
Okay. Dinesh from Noida is asking about a couple of, or rather 3 stocks in particular, and I'm coming to you, Vaishali. I'm reading them out. Bikaji Foods, Cyient DLM, as well as Schneider Infra. And he's looking at the long-term prospects of these 3, and he's wondering whether he should start buying them now for a period of, say, even 5 years, in a staggered manner. What is the time frame, or rather what levels should he look at specifically if he wants to start accumulating these?
Let's start with Bikaji Foods. Actually, yes, the trend is pretty much intact. And this is a good level because it is currently at a cluster of moving average support levels. I would say be very, very disciplined, because when I'm looking at the longer term time frame and all, 480 should act as a stop loss. Below that, the trend of all-time periodicity can get weak. So keeping 480 as your support, and further on conviction comes about 560 levels. So that should be the range that he should be accumulating. And then if it moves above the resistance level of 550, 560, then we are heading for a target of 600 and perhaps higher. So this is how he should plan buying Bikaji Foods. The other one you asked me is?
I'm just going to try and remember. Schneider is the other one, if I remember correct. And Cyient DLM.
Yes, so Schneider has given a superb run-up, and I think the trend is also intact. Even currently, it has just made a minor dip at around 750 levels. So keep that as a support, and one can buy even now, because if I am not wrong, it's on a verge of a breakout above 860. It gives a further projected target of 900, 920. So Schneider can be bought even now. And Cyient, I will just tell you.
In the meanwhile, let's pull that up. Yeah.
Yes. So I think that also longer term time frame is pretty much intact. He can accumulate at these levels, because in the recent past, we have seen that the stock has just made a high of around 2,300, and now it's quite in an oversold zone. So this could be the level of accumulating. You're asking me about Cyient
DLM, that's right.
Okay. So I would say yes, this too is a level, because 650 acts as a very good support. Repeated supports have been taken at these levels. So I would say good buying opportunity, and above 720, 730, it would be ready for higher targets of 800. So go for it.
All right. The next counter we're talking about is Parag Milk Foods. It's a 2,500 crore market cap company. The question from Satya. They bought the shares at a price of 202 rupees, slightly above slightly below what it's currently trading at. Saurabh, from a longer term perspective, the stock has done pretty well in the last 1 year. It's almost doubled. What is the long term view on something like a Parag Milk Foods?
See, all the companies in the dairy markets are seeing stable pricing for the milk, and they are venturing into the newer products. Dairy product. Apart from dairy products, they are adding newer products to their kitty and expanding their geographies. And that is what that is the reason behind the strong operational performance and the rally in the stock. I think it is better to hold this stock for another 3-4 quarters.
Fair point. That's the view on Parag Milk. We have to slip into a very quick break, so do stay tuned, viewers. We'll be back on the other side to take more of your questions. Welcome back. You're watching Ask Profit, and we are taking the next question from Srijaya. Srijaya points out that based on advice that she got on Ask Profit, she bought HCL Tech at levels of 1650, and I believe at the time she must have bought it from the long-term perspective, and the stock has dropped as part of the drop in the IT pack as a whole. For the year so far, and I'm looking at the year-to-date returns, it is down about 10% or thereabouts, and she's bought at slightly elevated levels. I'm going to come to you, Saurabh, on the fundamentals of this. We've seen the entire IT sector lose ground for various reasons, but at around 1300, would you suggest that she should average her holding and she should hold for the long term?
See, I would not suggest to average the stock, but at the same time, I would suggest to hold on to the counter. See, all these companies have shown good operational performance in the March quarter, but the guidance was weak in the context that the discretionary spending is not coming in the way the company was earlier perceiving. In the US also, the interest rate are likely to stay higher for long, which will curb BFSI sector to curb spending on the IT side. And in that context, I think the outlook has become bleak for all the IT biggies. So I think it will take another 3-4 quarters for these companies to experience to see growth coming back to the fore. So I think if she can hold for another 2-3 years, then there is no worry. At the same time, there is no point in averaging because as of now, it is a contrarian policy.
A fair point. Also, I want to clarify that the views that are expressed and the advice that is dispensed is aimed at helping you make a decision when you're investing in stocks and when you're trading. It's not a guarantee for success, and you should keep reviewing it, particularly your long-term portfolio, and pay attention to what is happening in a particular sector or with a particular company. So the IT sector as a whole has had not the best Q4, and that has played out in the stock prices over the course of the last few months. Let's take the next question.
The next one is Zomato, and this one's from Sri Kishore Sharma from Bihar. They say they bought the counter at a price of 192, so slightly above where it's currently trading at. This is from a 3-year perspective. Sort of, we just saw the fourth quarter results come in. Blinkit, it was a net positive EBITDA for the whole year for Zomato. So a positive sort of a sentiment there, but we did see a slight hit that the stock got after the results. But you look at Blinkit's performance, what a turnaround story that is. What's the long-term perspective on something like a Zomato from a 3-year perspective, and if you have a target on the counter as well?
See, from the long-term perspective, I think it is a good play. You can keep it in the portfolio. See, the turnaround was quietly factored in by the market in the stock price in the last 2-3 quarters when the Zomato became EBITDA positive. Since then, we saw that Zomato has been marching upwards, and the valuations have now been close to 9 or 10 times to book value. I think at times what happens when the good results come in, bull loading type selling comes into the picture, and that is what I think the stock is experiencing right now. I think in the few days, the stock will settle down. From the long-term perspective, I think you can hold on to the Zomato.
Okay. Do you want to also take a technical view on Zomato, Smriti?
Yes, let's.
All right. So Vaishali, anything that you can tell us from what you're seeing on the charts on Zomato?
I think it has performed very well, and currently also post results, it's holding on to the trend. So I would say every dip, if market has to get a bit volatile and we see a bit of correction, I think 180, 185 is a level that one can even add more, because we have a projected target coming towards 220 to 250. So that is how I would look at the stock.
Okay, fair point. I can't seem to decide myself whether to call it Zomato or Zomato. I think I use it interchangeably. Let's talk about Clean Science, though. That's the next counter that we're talking about. Clean Science and Technology. It's trading currently at 1306 or thereabouts. And we got a viewer, Shabir Surti, who's bought at levels of 1395 and is looking at a short-term perspective. Vaishali, what's the view on the charts?
Yes, I would say it's a fair value right now, 1280. All these stocks have really corrected so much. And right now what I'm seeing that the stock is in deep oversold and it's trying to bounce back. So in all likelihood, of course, he's going to get back his flying price, but I would say still hold on, because I think it's a matter of time. Like all stocks are cyclical. And Clean Science, if I'm seeing at the longer term period, I think it's pretty okay at these levels. Look for a target of 1400 to start with. If we see a move above 1400, it's ready for a takeoff to 1500 and so on. So yes, just stay put.
All right. Next, there are two counters we're talking about. This one's from Vishwanathan Nair, and they're talking about Inox India, if this is a good time to enter the stock. And the second one is a recent listing, which is Aadhar Housing. Saurabh, if you've had a chance to look at Aadhar Housing as well, do tell us if somebody should buy a stock at the current levels. It's, Inox India and Aadhar Housing.
Well, I'll not be able to comment on the Inox India, but in the case of Aadhar Housing, I think the company has a mix of portfolio, salaried and non-salaried, in which the non-salaried portfolio consists close to 45%. The salaried portfolio consists of 55% in their landing, and they are reaching far out, tier 2, tier 3, and interior, lot of interior places, which deals and those loans usually deals with the higher delinquency rate also. So I think markets have their own worry factor, and that is why we saw muted listing today. So I think it is better to have a stock in the banking sector, which for a long time. For example, a company like Union and Canara, rather than chipping into the NBFC like Aadhar.
Right. Let me also take Inox India. The levels, if what you should enter at in this counter. It's been on a bit of a downturn in the last couple of weeks. Vaishali, could you give us your view on this, if one should enter at the current levels?
Yes, I think it's at a make or break level. So currently at around 1300 levels it is. I would say do buy it at these levels, and if we see a break of 1260, then that could call for further slide towards 1200 and 1150. So right now, yes, for a short-term perspective also 1260 should be the stop loss, and go for the stock.
Okay, we have time for one more. Vaishali, this is a question from Sanjay. He's writing from Kolhapur, and he's asking whether you have any buy today, sell tomorrow suggestions.
Well, right now, today I'm looking at is Coal India. Coal India, that is what we have recommended to our clients also. So I think this stock looks good. Volume is also high, decent value. So keep a stop loss of around 457 and go for a target of 475.
All right. Unfortunately, as Alex mentioned, that was the last question for today. Thank you so much, Saurabh and Vaishali, for joining in and for answering all the questions for us. Viewers, thanks for tuning in on this edition of Ask Profit. We'll be back tomorrow to take more questions. But don't go anywhere. We have lots more lined up for you on NDTV Profit.